Hello, everyone. Simon here with AvaTrade. Welcome back to our weekly webinar. Of course, thank you for returning visitors. And of course, I want to welcome the new people that are coming in. And for those of you who are new, just a few words about the purpose and the idea of this webinar. And before we go there, I would just like to read the risk warning, which is important just to cover. Any capital markets and trading information disclosed in this webinar is provided for informative purpose only and should not be construed or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work, and whether you can afford to take the high risk of losing your money. And you can find the full disclosure statement at avatrade.com. So the idea of this webinar came when I was giving one of the webinars and I was talking about the importance of homework, and then somebody just asked, why don't we have webinars on homework? And that's after approval from the management, we started to really doing this webinar. And the idea of it really to give us a structure for the upcoming week is to create a plan, to stick to the plan. And I keep on saying the same thing: you plan your trade and then you trade your plan. Otherwise, trading becomes a little bit messy and results are not that great. Of course, there's no guarantee if you make a plan, you make money. Of course not. But at least you have a direction. You try to really create a structure for your trading and stick to it, and it makes things much, much easier. Okay, so agenda as usual. We can go through a little bit of fundamentals, the big picture, what's happening. Then we'll go through some economic calendar events that are coming up in the next week, and we'll talk about indices, FX, commodities, and some stocks. And that's going to be individual on the MT4 platform. Okay, and let's talk about the big picture. What's going on? What's ruling the markets? And this is very important to understand. And I think we're really entering in this upcoming week in a new territory, the territory where the market is going to be really, really spooky and scared of the next kind of action or actions in plural of the Feds, especially after the NFP report, which was surprisingly low employment, but there are discussions that it doesn't mean that employment is not great. They showed some statistics of the household surveys, and they said that a lot of people that potentially would seek for a job that would actually go and start as a self-employed, and that's why it's not showing in hiring. So a lot of publication, a lot of articles out there saying that increase in tapering, it's definitely there, and from 15 to 30, and that's what Powell was talking last week on Tuesday. And the next step is some economists and analysts are saying that next year they'll start really increasing the interest rate. Some don't expect any actions till September. Some speculate that it could be as soon as March, and then another one in May, and then another one in December. There's a few opinions, but it's getting there, it's getting closer, and that's something that might have a little heavy weight on the market in the upcoming weeks. So we'll be watching that. Okay, this is the economic calendar. And of course, before we go into it, just of course to mention, besides all the Feds and NFP, the COVID is there, the Omicron is still there. There's a lot of controversial ideas. Some say that that the boosts of the vaccination are working. Some say they don't have enough data. It might take weeks, if not months, till they find a solution. And it's all push and pull for now. I guess in the upcoming weeks we'll have more on it, but definitely it's not a positive thing, and it is it does have weight on the market as well to the negative side. Okay, this is the economic calendar. You can look it up. A lot of providers give it. I just pulled out something that has the high impact in red. So on Tuesday, we have interest rate decision from Australia, followed by the statement. We have GDP numbers from European Union. We have gross domestic GDP from Japan. That's on Tuesday. Then Wednesday, we have interest rate decision from Canada, followed by the statement. And then from Australia, we have Governor of Bank of Australia speaking. We have inflation data from China on Thursday, the CPI numbers. And on Friday, very important CPI numbers from US, followed also by Michigan Consumer Sentiment Index. Okay, and so what's based on that? What can we follow? Of course, the Australian dollar will be in play. It could be a surprised or not surprised interest rate increase. Then the same thing for Canada. Canada, together with the UK, they have been talking about increasing interest rates, and we're in December now, so we could see a change. They don't expect anything. The expectation or consensus is the same, but we've seen surprises in the past, and we could see more surprises as well. So we'll be watching Canadian dollars as well. Of course, Chinese inflation somehow will affect the market in China, and not just China. We'll see how that affects the international markets. This week, a lot of Chinese stocks were sold on the U.S. markets. Let's see if this number somehow will do anything to it. Then, of course, the CPI numbers, which the Feds are really closely watching. And just to tell you, last week, I don't know if you had the chance to follow what Powell had to say. And there's a lot of interesting opinions out there. They say the moment he was reappointed, he really stopped being so careful in his language. So now that he has nothing to worry about, in a way, he was just reappointed as a chair. And he just clearly said that inflation is a threat to the economy, and that they will really increase the tapering and so on. So it's a different language, and we'll be watching what these numbers will bring, and that's the end of the week on Friday. Okay, so again, just to put it all together, COVID is still there. A lot of issues that affecting everything, including the markets, of course, the individual stocks. And we have Feds on the horizon with possible interest rate increase. And let's move on to individual instruments now. So what I did also differently this week, I put some moving averages here, as we really had some great moves on the market. So I would like to really see a little bit of a big picture, and that's why I draw. So just for your information, the green one is the 50-day moving or 50 moving average. The yellow is 100 moving average, and the red is 200 moving average. So if we're looking in the daily chart, that means that this represents a daily moving average. Okay, that means the line, it represents average price for the past 50 days, and of course yellow for the past 100 days, and the red for the past 200 days. So before we go in anything, I just want to bring to your attention the Bitcoin. A lot of excitement around Bitcoin, and take a look at this drop. This drop happened actually today. It's the Saturday night, and the move is tremendous. It's about 20% move, and it has recovered nicely, maybe 50-60% just roughly here. This is a daily chart, so we broke the previous day through the 100, and then we went through 200, and there's a buyback coming in. So I went through some articles and they're saying, okay, yes, so far buyback has been working. So basically investors are buying the the pullbacks, the corrections, and then they're doing well. But they just wanted whoever wrote that article, don't remember, they said, investors should still remember December of 2017. And I went to the chart, and this is December of 2017, where we had the correction for the whole year. So this is the monthly chart. So in December, December 17, the price of Bitcoin hit almost 20,000, 19,750. And then for the next year, it went down. December was the lowest point, and the lowest was $3,113.18. That's a huge drop. So they kind of warn the investors. They say, okay, it's great to buy pullbacks, but don't forget what happened in 2017, 2018, and it makes sense. So it's going to be a lot of excitement there. This is the weekly chart. This is the daily chart. We'll see how the week will what the week will bring to Bitcoin. Will the buyers step in? Will they let it slide? Look for the lower prices as a bargain. Of course, Ethereum, the similar idea, even though it recovered much stronger. Take a look. Ethereum actually recovered into the Friday's range. That's interesting. Bitcoin hasn't. Okay, so just we got it out of the way because I like to mention it. Bitcoin is a highly popular instrument. A lot of people are trading it. So the news you probably read all over the place. I wanted to bring it up. So let's move on. Let's move on to indices, and it's a very interesting story. Also, I read one of the writers on the MarketWatch.com, and he brought the analogy of a year 2000 on the .com bubble burst, and he compared Dow Jones and Nasdaq. He said, how was it diversion? The days when Nasdaq was up, the Dow Jones was down, and vice versa. So let's take a look the last day, the Friday. So Friday Nasdaq went down, and Dow Jones was actually up, and the previous day as well. So it said similar moves in the market happened before the burst of the bubble, and also um, the partner of Warren Buffett is saying that we are. You will see it on a different publication. He spoke about this market being a bubble that's going to be worse than the bubble of 2000. So it's building up. It's building up. Of course, logically, if you logical think, what's happening in the world, all the negative things, the COVID and so on, and the market is doing crazy moves. There's at some point we will see the burst of the bubble. So a lot of things are building up, and I think um, even Goldman Sachs now over the weekend they really downgraded the U.S. economy for the next year. I think this is the first time I hear it from Goldman. Goldman is kind of a weatherman of the market. Whatever they say, it happens. So again, nothing for granted. But next week we probably see a sell-off on the markets. And even though normally December is called the Santa rally, the Santa Claus rally, that the market's going and closing at the highs, this year could be the opposite, similar what happened on Thanksgiving. Usually it's an up day around the Thanksgiving, and we're sold out. So let's go through indices maybe one by one. So S&P 500. S&P 500. Let's take a look. We are in a sell zone in a way. Okay, this was the previous support over here that we confirmed. It was a resistance for a while. We went down from this level, which was September. So we had a little sell-off here, a little pullback, and then we went through it. We confirmed with these two bars over here, and then we went higher to make new highs. Now we had the first day closing below it. That was December 1st. Then we had a reversal. We closed above, and then we closed below it again. Really high ranges. Take a look also, high ranges, high tails shows a lot of volatility, and we closed below. So 45, 46, 45, 50, this level is in a way a resistance for now. And also we are trading below the 50 moving average for the past 3 days. And I guess the next thing we want to see is closing below the 100 and so on. We'll be seeing probably approaching the 200 moving average. The psychological level, of course, is 4,500. If we break it there, we probably see continuation to the downside. If you take a look at the weekly chart, this is the second week down. As I could see it here even clearly, that we are below this previous support. This was a resistance, so then we are below it. And technically speaking, if this move accelerates, we might see the move in the upcoming weeks. Sooner or later, it possibly will hit this candle's low, and that is 43.17 and a quarter on S&Ps. That's about 230 points from now. That's about 5% roughly. So that's S&P. Nasdaq, let's take a look on daily chart. Nasdaq Friday was the first time we closed below the 50 moving average. We almost touched the 100, and we are actually sitting, unlike the S&Ps, we didn't break this previous level where we sold out on September. So we would like to see, if we're expecting to move lower, would like to see a closure on daily close below this level, and then possible continuation to the downside. Dow Jones looks much weaker. This is the weekly chart. Okay. On the daily chart, we broke 50, we broke 100. We're trading way below 200 moving average. So it's the weakest out of three, even though Thursday and Friday it had the up moves. So on this one, we are below September. We've been there for a while, and we are continuing sliding down. Let's take a look at Nikkei. Nikkei had a strong week. The previous week sell-off, and we closed lower this week. It shows the continuation to the downside. FTSE had a huge drop, and then we are trying to hold it. So for FTSE to go lower, would need to break this low over here and continue lower. DAX is very weak. DAX, unlike FTSE, didn't really recover, and it confirmed the drop of, this is the Thanksgiving drop, and the low here was 15,074 and a half. We touched this on Friday, and if we can't hold it, we're gonna tip over and go into the next step down. And so far, take a look, this 50 moving average is really holding here. So if we do close, this is the weekly chart. If we do close this week below it, we might see continuation to the downside. French index, also a strong move down, and we are on the way to retest the low. So the indices in general having a lot of pressure to the downside. Like we said, there are a few countries that have been talking about increasing interest rate. That's not really going to help the markets. It just put more pressure on it. So we might see in the upcoming week or weeks acceleration to the downside. So that's as far as the equity markets go. Let's move to commodities and go to the major ones. Crude oil had major sell-off in the recent days, and of course this was on the COVID news, on the Omicron announcement, and then we are sliding lower. We did retest this level here. Take a look. So far we're holding it. So just to explain, we stopped after this move, a robust move higher. We had a little pullback, a nice healthy pullback correction, and then we stopped around this level, and the low of this candle was 62.29. From here we made the new high, so that's where, let's just see, interesting, 62.29 was the low from which we started the recent move, and the low here was 62.43. We didn't touch it by 14 cents. So let's see if this really was an attempt that failed and we continue higher, because there's also a lot of controversial things on oil. It all depends on OPEC action. Will they increase? Will they not increase? Of course, on the demand side, we will see how the COVID situation is. Are there any reopenings? Because as of now, a lot of countries shut down the airspace and there are no flights, and of course that hits the demand for the oil. So that's the oil, right? So far it held this level around 62.30, and let's see if we break that. Natural gas had a tremendous drop on Friday after this choppy trading. We went in one day, we dropped almost $1. That's huge. Just to give you an idea, this is weekly chart. In a week we drop it, but on the daily just went straight 5 days down. And it could be that we come and test the 200 moving average. That's 3.848. It could be that we will retest this level from which we start actually all this strong move higher. Let's see. As of now, the previous day, so the Thursday, would be an indication for us. So the low of the Thursday and the high of the Thursday. If we break higher, we might go higher. We break lower, no brainer. That's a simple way of looking at it. We can't really predict what's going to happen. So the Thursday range is our indication of what might be happening next to natural gas. Gold had an up day with the market selling off, and it's on the way up to retest 1783 level, and it's not giving up. It's been holding here. Why we held this level? Take a look, the 1760, around 1760, we holding that as of now, and after this recent move higher, we came back to retest it. We succeeded in holding here. So potentially, if the market, of course, if the market's selling off, that would give a little bit of a boost to the gold, potentially going higher as a safe haven option. So we'll see what if that's happening this week in gold. Other metals, also that's palladium sitting on 200 moving average. After a big sell-off, had a little bit of a move up on Friday, and platinum, the same thing, very crucial. We're sitting on the 200 moving average. That's as far as metals. Let's take a look at coffee. Coffee in the weekly charts looks strong, and take a look at the daily. Very interesting. We had a strong sell-off day on the 29th, and then we held this level, and then we on the way up to retest the highs here. And just for your information, the high here was 247.95, so we might be on the way to retest let's say 248, and we have our support. That's where we stopped. The recent support is around 229. So interesting range, 229 to 248, and we might see a little bit of the ranging here before it decides to go either higher or come back lower. That's coffee. Let's move to FX area, and we'll start with dollar index. Dollar index shows a little bit of undecisiveness. It doesn't know where to go after this robust move higher. So take a look. This is the weekly chart. This was the week of 14th of November. Then we went higher but closed pretty much flat. And last week was a little bit of a selling. If you look on the daily chart, this was the move on the new variant, COVID variant. and then pretty much flat day, and then we had a high range selling day, and now we're slowly climbing higher. We are about 96. So the key level is now between 96 and 97, which is a big range. But this is what we are facing now. So dollar index, it's strong as long as it stays around about 96. It really looks bullish. And if you take a look, so this doesn't look so strong for a dollar, right? But now I just want to show you. I'm going to go through all the major currencies one by one, and I'll show you how they really sold out. So I guess even though the dollar didn't show such huge strength, we didn't make new highs, new recent highs on dollar, but other pairs against dollar really sold out. That's very interesting. It means that it's still a lot of worries about the strong dollar coming up, and the traders or the investors or the big players are anticipating it, and they're already acting up. So let's start one by one. We'll start with euro dollar. Euro dollar didn't do much. It was pretty much flat on Friday, but take a look at the Australian dollar. Huge sell-off. Take a look at New Zealand dollar, huge sell-off. Take a look at Canadian, very strong US against the Canadian. And USD ZAR didn't quite make the new recent highs. And another thing I want to bring to your attention, you probably heard the stories about the Turkish lira. There's a lot of issues with Erdogan. He didn't let the financial minister to take care of things. He actually fired him. I think he reappointed somebody else on that position. But just to give you an idea, this is the monthly chart. The whole month of November, lira fell so much. This is the USD against Turkish lira. Take a look at the weekly chart. 3 direct huge bars to the upside. At some point, it will finish. This is the daily, so it looks like it's cooling down a little bit. We might see some development here, a lot of action around here. Some traders trying to short the instruments, hoping that the lira will stabilize a little bit, and then you see these tails. We kind of holding from going any higher from here. So that's something I wanted to bring to your attention. So as far as the levels, I found very interesting here on those two losers, the Australian New Zealand dollar. Something for us to pay attention this week. Let's take a look. This is where the move started, the recent move higher, and then we came after all this up and downs. We came straight to that level. We right at the point at this spot here. So the low of this candle here was 69.90, and we are low here 69.92. We're 2 pips above that level. So some traders might find this very attractive to start buying around here. Of course, the opposite scenario, if we break through and start closing, let's take a look at daily chart. We start closing about it, we might continue lower. But again, this week we might have some surprise from Bank of Australia on interest rates, so that also might boost a little bit to the upside. So Australian and New Zealand dollar, similar idea. Take a look. We're also reaching some serious levels. This was the level from which we sold out. A lot of actions here. Take a look. All this action around this level, over here, and now we actually closed below it. That's very interesting. We closed below it. If we're not pulling back up about this, let's say 0.6750 level, we might see acceleration to the downside. So Australian and New Zealand dollar will be watching this week for the current level where they closed on Friday. Very important. GBP, the pound is coming also. Let's remove this line here. Take a look. This were in 2 weeks we really sold tremendously on the pound. So we'll be watching this level very, very closely. This is 132. We are on the daily chart. We would try to take a look on this high spike here, and then we tried again on Friday. We almost reached that level, so we'll be watching that level. So the three currency pairs: Australian dollar, New Zealand dollar, and the pound, will be watching for potential reversal or continuation to the downside. That's as far as the currencies. And another one to watch that I mentioned last week, that's the Japanese yen. Even though dollar was strong, but it was weak against Japanese yen. And if you can take a look, we are trading in a very interesting territory. This where we sold out, a lot of action this level, and we are trading currently 112.83. This last week we were as low as 112.52, so we went up another 30 pips, but we'll be watching this level 112.39 or 112 area, which was right here. This was 112.22. So between 112.22 and 112.39, this area here, it's going to be very interesting. If we enter into this territory below 112.22, that potentially could move that the yen will continue its strength and the dollar yen will continue lower. And again, if the market sells off, that's what I explained last week, the market sells off, the money might flow into the safe haven, which in this case could be gold, yen, sometimes it's Swiss franc, does the same. Let's take a look, by the way, what the Swiss franc is doing. Yes, dollar is a little weak the past 2 days against the Swiss franc. So again, as far as the Forex, dollar is holding about 96. It's very nice. The biggest sellers are Australian dollar and New Zealand dollar. And together with the British pound, is sitting on very, very strategic levels now, from which we could have either a nice reversal or continuation to the downside. Okay, let's move to stocks. Just take a look what the major stocks did last week. Tesla sold out with the market, even though it was very, very strong, making new highs recently. We had a high at 1242, and we closed 1,013.80 on Friday. Let's see what this week brings. Boeing. It was a tough few weeks or few days for Boeing, with the sell-off and the gaps and so on. And the last 2 days, actually, it shows a little bit of strength. Let's see what happens. Walmart, on the other hand, on the sell-off on Friday, Walmart had a nice day, but take a look. This was, I hate to say it, but some call it a dead cat's bounce. 1, 2, 3, 4 days, and the fifth day we actually went high in the close about the previous day's high. So it could be that Walmart, it's one of the oldest stocks and one of the great stocks historically. It could be that from here we could see some correction there. At least we established some kind of support around 135 on Walmart. Disney, continuation to the sell-off since the last earning announcement. Facebook selling off, so all the major stocks are pretty much selling off. Even Netflix, which went up on the COVID news as it did before, it really selling off, but we stopped around 100 moving average here. So it could be also that we're holding the level that from which previously we held nicely, and we made the new high. So Netflix around 594 area could be holding up. Pfizer very strong and holding with all the vaccination. Apple had a little bit of a roller coaster here. First good news on iPhone, then the bad news on iPhone. Let's just establish some levels here. So this was the previous level from which we sold out. We retested it recently. We held 157 is holding. And as far as the upside, we made 170, the all-time high, 170 and 12 cents. So we are in the channel now. Okay, so between 157 and 170, about $13 range. Microsoft. I mentioned last week that the insider announced that he sold, I think CEO, if I'm not mistaken, sold half of his holdings, and that also accelerated the selling. Microsoft was very strong until the 22nd when we make a new high, new all-time high, and then sold. And now we've been selling off on the Microsoft. Of course, when insider is selling, it's not really a great news. But let's take a look. We might continue this. We're still about 50, so it's still very strong. This could be a healthy correction. But again, if the market is crashing, it would pull in the best stocks with it. So Microsoft could be continuation to the downside. There's nothing strong so far. This is the level we might come to retest 305. And if that happens, we have another $17 to move, because that's where we really had a hard time breaking. We had few attempts to break this level around 305. So if we are continue sliding lower, this could be the next strong support that might hold. Google also a sell-off, no bouncing, so it could be continuing. We are closing below 50 moving average, but we're holding the 100 moving average here on 2 attempts. Let's see what's next. Amazon had a very nice sell-off from the peak. We went from 37.60 to 33. What's the low here? 33.37. A nice move. We are sitting on the 200. We bounced off 200 moving average. Let's see what this week will bring. And JP Morgan, also financial stock, it sitting on 200 moving average. And just another one, the last one I just want to bring, last two actually. Alibaba, for bargain seekers, they tried to pick up the stock a few times. It's been selling off very, very strongly. This was a little correction here, a little breather, but since then we gapped and we're continuing lower, and it doesn't look good. At some point it might find some support. And Uber. Remember a while ago I said that there was a recommendation to sell of Uber and so on, and the stock's been having a hard time to break 46, 48, and then it's been selling off since. And maybe at some point it will stop. Maybe this could be the level from which we started the whole move, and the low here was 33.98, so $34. We're trading about $1.88 above it. So that's it pretty much for today. Again, just to kind of wrap it up, the Fed's on the horizon, and there's actually was an article that the market is scared not from COVID but from Feds at this point, and it's true, because for now it's what the Feds are going to do next and how soon are they going to do it. And this is the key point. We have some announcement that we went through. We went through a few stocks. Bitcoin is in focus for possible bargain to pick up. At the same time, it represents a threat, a risk of really getting into it big, because we might see another move lower. Dollar is holding about 96. And I wish everyone an amazing week. Have a plan, stick to it, control your risk, control your equity, be in control. And the market requires being in control. I've been doing it for over 21 years, and I know the days when I have no control, my P&L suffers. The days where I really control things, I might not make a lot of money, but at least I will not really drop my account to the critical level. So I wish everyone a successful week. Stay happy, stay healthy. All the best.